Welcome to Economy Made Simple. I am Shamubeel Eaqub, the Chief Economist at Simplicity. There's a lot going on in the world right now, and I'm here to make sense of it. Brought to you by Simplicity, New Zealand's non-profit KiwiSaver and fund manager, who are on a mission to make Kiwis richer and smarter with money. Hello and welcome to Economy Made Simple. Today I have a very special guest, our very own Sam Stubbs. So Sam, today I want to talk to you about a bunch of things. But first I want to talk to you a little bit about why did you start Simplicity? I want to talk to you a little bit about your personal journey. I want to talk to you a little bit about what you saw overseas in terms of how the world sees New Zealand. And finally, I'm really interested to hear how superannuation and investments by pension funds is a real source of opportunity. So quite a few things to cover. Let's start with just why did you start Simplicity?
Look, it's a standard midlife crisis. So I'd had an incredibly lucky life in the sense that I grew up in a part of town where you had to strive, and you, if you wanted to get out of there, you had to work hard. So life has some lucky breaks, and although I do tell my kids it's amazing how successful, hardworking people are. I went on the hedonistic treadmill, and I just wanted money. I mean, I saw poverty all around me, and I saw these rich kids, and I said, I want to be one of them. So I went and I did it the path that I thought had the optimal risk-adjusted return, which was investment banking. They seem to get paid a lot. I went and did that overseas, had a lucky career. And then when I came back, though, because I grew up in West Auckland, I started to get really angry about the New Zealand that I was living in, which made a few people a lot wealthier and an awful lot of people poor or poorer, so that wealth gap was widening. So when I had my midlife crisis, which was, hedonistic treadmill, I had everything I needed, boats and cars and houses and that. And I said, I'm just not happy. I'm just getting unhappier the more and more of this stuff I get. So I had the classic crisis that you have in your mid to late 40s. You haven't had that yet, but you probably will. And so what I decided to focus my energies on was actually looking after the people from where I came, looking after the people from Sunnyvale and West Auckland. So, and I tried to work out the way to do that. Now I started out, I made a false start. I just planted a lot of native trees on an island thinking that was going to be, I just ended up with a sore back. We got together and we said, look, let's go and work in the area that we know. Let's go into the finance industry because it happens to also be the biggest industry in town, if you think about it in terms of profit and its impact. And let's be gamekeeper turned poacher. So it wasn't just me, it was four of us started up the business and with that common mission. So that's how we got here. It's easily been the best job. I mean, I've got the best job in the world. It's fabulous.
Well, you'd said that I might have my midlife crisis, but this is my midlife crisis. I came and worked with you.
Yeah.
And
that's true, actually.
This is for fun, right?
Yours is just a lot more sort of genteel and dapper. Yeah.
Tell me a little bit about your journey out of New Zealand. What motivated you, or what were the opportunities that got you out of New Zealand, and where did you go?
Yeah, well, look, I married well, right? I married a diplomat, and so we went to London, and we had that life, and then I got introduced to the investment banking world there, and of course, which was huge and full of opportunity. And I did the typical Kiwi thing. Like we have a competitive advantage when we go over there because I came from a university that people didn't recognise. Funny accent, but they know they're hardworking. They do well in a place like London. They're well accepted. So just got a couple of lucky breaks, right? So I just happened to meet a few people who got me in the right place.
Where did you work?
I started out working for an English bank for about a year, but then a friend who knew a friend introduced me to this business called Goldman Sachs, and I thought, what's a kid from West Auckland's never going to get in there? And 54 interviews later, I got in. Like Goldman are really, they're very suspicious of, people who haven't gone through Harvard or Stanford or whatever. So, but I got in, and the rest is history. It was an incredible career in London and Hong Kong, and stints in places like New York, and doing a range of different things. I was working with hedge funds primarily, and that's sort of like the zenith of global capital there, right? The most aggressive, the fastest moving, the most connected people. And so it was really interesting to see that. I mean, it was a real privilege. Yeah.
We probably worked at Goldman's at similar times because
Yeah.
I was there for a brief period
Yeah.
of time as the New Zealand economist
Yeah.
many years ago.
Yeah. And it's interesting, actually, Goldman's is a very interesting business because from the outside they call it the vampire squid and it's incredibly aggressive. On the inside, it's a very interesting beast because at least the division I was in at Goldman, it was the most collegial, the most teamwork-oriented place I've ever been, and actually internally the most humble place I've ever been. So their success was not individual aggression. Their success was getting a team working. And in fact, it's interesting in Simplicity, many of the ways that we run Simplicity mimic actually the lessons learned in Goldman Sachs.
It's funny because that was my experience of the global economics team.
Really? Okay.
You know, we had Jim O'Neill, who was the chief economist at the time, and he was amazing. And so was the global economics team. There was a whole lot of wraparound that I learned so much from. And I think that's one of those lucky breaks in life. It was interesting hearing you about your life and just how much of it was not just hard work and talent, but so much of it also those having those opportunities, the luck, but also being willing to say yes to those opportunities.
Yeah.
I think there's an element of courage that's required.
I guess there is at times. It doesn't necessarily feel that way in the sense that you're getting out there and making connections and opportunities get offered. And sometimes it's easy to say yes, sometimes it's a little bit harder.
Of course.
But, you're absolutely right. I think that so much of success in careers, well, actually, here's a great line that someone told me. It says, it's not what you know, it's who knows you, right? And so you just have to get out there and network and get known. Because then, of course, your hard work is recognised and people take a personal bet when they recommend you, right? They're putting their own reputation on the line. That is why when you do get recommended by somebody, you're immediately on the fast track. It's actually interesting. I was listening to a podcast coming in this morning. Apparently in Morgan Stanley, which is Goldman Sachs' great nemesis, apparently 80% of people are hired on personal recommendations. So if you are not known to somebody there, it is way harder to get in. And of course, that would be a place a lot of people want to work. So, I think that you just have to get out there. You have to be a risk taker in terms of take a risk on getting to know people. And I personally think most people are scared of other people.
I guess the reason why I'm asking about this is because, because of your lived experience, I always find it interesting to think about the economy through people's experiences. Quite often we kind of talk about the economy in terms of a function of people and their education and those kinds of things. That's easy to see, but what you can't see is the importance of those other bits, the bits in between, those relationships, those connections, to be able to take risks.
Yeah.
These are actually really important personal traits and things that you can develop as well, which are part and parcel of personal individual success, but also business success. And I think sometimes that's not articulated well enough when we talk about the economy. Let's flip it over to a place that has lots and lots of drive and lots of zeal. You lived and worked in Hong Kong for a long time. That is probably the most pressure cooker environment I can imagine.
Yeah.
Give us a little bit of a sense of what it was like living and working in Hong Kong.
Yeah, amazing, because you were really the gateway to China when I was there. Shanghai was really not relevant. So if capital wanted to get into China, and it really wanted to get into China, it had to go via Hong Kong. I mean, I'll give you an example. Like there were so many amazing examples when I was there, but we listed the first big Chinese telecom company, China Telecom, and it was only in 2 provinces of China, but it had 70 million subscribers, right, on day one.
Scale.
Just the scale was astonishing. So I ended up taking the chairman of China Mobile around to see European investors. We actually landed in Germany. We were outside Frankfurt, and there's a long motorway from the airport there. And we arrived in the middle of the night. But this being a Chinese delegation, most of these people were traveling overseas for the first time. So normally you'd arrive with 2 or 3 people. They arrived with 30 aunties, uncles, sisters. So they were all in buses, but we had these big black Mercedes that turned up and outside the plane. And anyway, we're driving along at 100 miles an hour in the middle of the night in the pouring rain in Frankfurt. Now, that's perfectly normal. That happens all the time in Germany. They go really fast. But then I get a call in the front of my seat, and the guy from behind, because the chairman of China Telecom doesn't speak a word of English. I can't converse with him in the car. And the guy phones me up and says, "What the hell are you doing? Tell him to slow down." I said, "What's going on?" He says, This guy's never travelled more than 30 miles an hour in his life. He's never been on a highway. He's never been in Germany. So I thought he was just having a business conversation. He was panicking that he was going to die. So there's all these sort of and this is the chairman of a company with 70 million, had never been in a car travelling more than 30 miles an hour. So you kind of forget how quickly China has grown, right? It really rocketed up. So when you're in Hong Kong, you saw that. There's a contrast between Western money coming into this great opportunity in China, and really it was the financial hub of Asia too, apart from Tokyo. So there was a lot of other countries we were getting involved with. And so everyone wanted to learn about China. So we were just getting this constant group of people coming through, and we were showing them China for the first time, which was kind of cool.
When you were in Hong Kong, was it only facing into Asia, or did you do anything in terms of showing Asian investors and global investors New Zealand?
Well, no, and I'll tell you why. Probably not a bad barometer of this is how many times would I travel to these countries from Hong Kong in a year? And that was sort of relative to how much money was flowing. I would go to Australia 3 times a year maybe, but I would go to China, 30, 40 times in these countries. I never came to New Zealand. Why did we not come to New Zealand? Well, I'd probably summarise it this way. If you go right back to my first job in London, and I was hired to sell Australian and New Zealand companies to European investors. So I phoned up this English person. It was pretty brutal. It's very competitive being a stockbroker there with these,
Yes.
right? So I phoned up my first big client. What is the percentage weighting of New Zealand in the MSCI Global Index, which was the value of all the stock markets in the world, how big was New Zealand? And I happened to know, because as Kiwis you kind of know that. And I said, yeah, it's 0.2%. He said, get your calculator out. How much of a working day is that? I said, that's 30 seconds. He said, your 30 seconds is up. Cling. And hung up on me. So, New Zealand is just nowhere in that. And it still is nowhere in terms of global capital. So the government can raise money with government bonds. That's okay because it's the government. So at a government-to-government level, or government-to-investor level is fine. But otherwise, it's very, very hard for us to get noticed. It's a big, noisy world out there.
I don't want to be too pessimistic because I think things are changing in New Zealand. KiwiSaver has really changed the state of, savings in New Zealand. Until pretty much about 2007, 2008, we had massive problems with lack of savings in New Zealand. But since then, we've seen less than 20% of household savings to now over 60%. We've seen our funds management industry from shrinking to now growing quite rapidly.
Yeah.
So I feel like something has shifted in terms of New Zealand's relative position in the world. Still not as good as Australia. I still think we're kind of 30-odd years behind Australia.
Yeah.
But isn't that an opportunity when the world sees us and us saving and starting to invest?
Yeah.
Isn't there an opportunity that should be shifting?
Oh, yeah, no, there absolutely is. I mean, can I just go back a bit too? Because New Zealand has changed massively in the world in my lifetime. First of all is the world's got a lot smaller. And if you think about the impact of technology, that means the further away from the action you were, because technology makes you instantly connectable, you have a relative advantage being far away. You actually get closer. You see what I mean? So
Yes, the economic distance is shorter.
Yeah.
Yeah.
That's one thing. The second thing is New Zealand's on the map now in other ways though, right? So we just used to be known for All Blacks, but now we've got, Lord of the Rings. We've got a huge, basically massive movie industry. There's all these things, and there's a whole lot of people coming to New Zealand because they're falling in love with the place because it's, this little paradise in the South Pacific, right?
It's also a nice escape from the turmoil of the world
Yeah,
when you've got nothing around you really for 2,000 kilometers.
So, you want to say, so I think we get a disproportionate amount of attention from influential and powerful people by virtue of being the place that we are now. But we've never really had the money, right? So whenever we've wanted to do anything big, if the government hasn't paid for it, you've got to go to the foreigners, right, to apply that money. And I think you and I have sort of talked about this. I'm not sure if you quite agree with me on this one, but I think the New Zealanders sort of had tidal waves of foreign capital. And, it was the English, and then it was the Americans after World War II, and then it was the Japanese, and now it's the Chinese. And the problem with those tidal waves of money coming in is the wave goes out, like when New Zealand becomes unpopular, and it just causes a lot of economic turmoil, right? As opposed to now we're going to have a rising tide of money coming in because of KiwiSaver. It's going to be our own money buying those assets. And that, of course, makes it even more attractive to foreigners because suddenly you're in a capital-richer environment, right? You're not the only game in town. So I think we've seen some really interesting transactions in the past. Like, look at the Wellington Lines Company, the electricity poles and lines in Wellington, owned by a Hong Kong company. Actually was working with them when they did that transaction. And that was been really good for them. The lights stay on in Wellington. Arguably the returns are too high. I'd argue that we negotiated too good a deal, right? But there was a desperate vendor there.
Yeah.
But now the foreigners won't get a look into that because now New Zealanders will be investing their own money via their KiwiSaver funds in those assets.
I guess the example is what has happened in Australia, because the Australian pension funds have been absolute innovators when it comes to investing in those big infrastructure projects. In fact, they were pretty much the pioneers in that space.
Yeah.
Did you deal much with them in your kind of working life?
No, we saw them as investors in Asia, so they're investing a lot of money there, but we could clearly see they were big players in infrastructure, right? So if you look at a bank like Macquarie in Australia, like there's nowhere in the world that Macquarie doesn't own something, it seems, water systems and roads and so on. So the Aussies were, and it's getting back to that aggression and that risk, they were clearly out there. Once they had the money, they were out there playing in the global stage. So I think they're a very good model for us. As I often say, Australia's got 5 times our population, but 30 times our retirement savings. So, no shit Sherlock when you go to a place like Brisbane and the buildings are taller and the roads are wider and it's cleaner, and that's about the same population as Auckland, right? It's an instant comparison there. So the impact that they've had on the Australian economy has been amazing.
I want to just touch a little bit more on this, the wave of capital, because, on my numbers, we're going to increase almost tenfold from here, right? So we've got 130 billion now. In the next kind of few decades, we're going to be over $1 trillion. Now that we've got this, almost this excess of capital, right? Finally, we've got capital to invest in. Are there opportunities that you see both out in the world, but more importantly, are there things we can do in New Zealand?
Oh, yeah. I mean, it's $1 trillion is crazy, eh? Like $1,000 billion of our own money.
Isn't it?
It's amazing. But it's an amazing opportunity, but it's also could be an opportunity lost because, yes, it's great that we're saving money. Of course, that's good. But that money could all go overseas so easily. You can push a button and just invest it overseas. And that's fine. That gets an economic return. But it doesn't employ anybody here, right? If that money was invested locally, it would generate more wealth over the long term. I think that's the pretty accepted.
Generally speaking, especially if you're building things that you really need, right?
Yeah.
So if it's supporting entrepreneurship, if it's supporting infrastructure, that physical capital, because that gives you the opportunity to have more prosperity, more job opportunities, high quality of life.
Yeah.
And you're absolutely right. There is a difference between, I guess, financial investments and investments in physical things in the real economy, if there is a deficit of those things.
Yeah, exactly. And look, it's highly politicized, right, too. So, if we want to build the hospitals and the roads and the schools and all the things that we want, we kind of got to do it with our own money because as a people, we do not want these things owned by offshore interests, owned and controlled. We used to because we were desperate, but I don't think we do now.
Yeah, and I mean, surely there's a way for us to kind of have a mix of bringing in foreign expertise if necessary to get the best of those kinds of things. I guess my kind of personal sense is that sometimes we are too parochial in the way that we think about things. In infrastructure, for example, our businesses are not sufficiently big enough and they're not vertically integrated enough, so we can't do the design and build. So we can't innovate and deliver the kinds of projects they do in Australia. And even Australia is not that great.
Yeah,
and
I hear you. So, the next tunnel, I'd quite like it to be built by, the French or the Italians or the Spanish.
Or the Chinese.
Or the Chinese, because they're really good at doing tunnels, right?
Yes.
But who ultimately owns it? I would like to be New Zealanders using our own savings.
Sure.
And the process of being able to fund it, this is where KiwiSaver is amazing, right? Because, and all this capital we've got, we could go and say to whomever, you build it and we'll buy it once it's an operating asset. And we'll own it forever. So, this is investing in the hood now, right? We haven't had this option before.
To me, it feels like if we do it right, it can be a reason for optimism for the long-term future of New Zealand.
I think the next 30 years will be the best in New Zealand's history.
Let me pull you up on that because it will be if we make the right decisions.
If we do this, yeah. And I think we will. I don't think there's any other way which is politically palatable, or I just don't think the governments will get away with saying, sorry, we're not going to build the infrastructure because we can't afford it. Sorry, so we're not building it. Or we're building it, but all the foreigners are going to own it. when there's this third option, and hopefully it's people, like us getting in and saying, hey, we can buy this thing. The issue is we're not there yet because the politicians don't get it, and I get that they don't get it because they haven't seen the impact of KiwiSaver yet, right? They haven't seen, felt and touched and said, oh, this is actually a realistic option now. But that's going to happen, when you can see some of the things that we're doing with Simplicity Living, for example. When you're actually building infrastructure, houses are in a sense infrastructure. Actually, I'll give you an interesting little anecdote on that, right? So the government had a big infrastructure conference earlier this year, and it was extremely well run. The presentations were fantastic. The room had, I'm guessing, 50 offshore investors and 2 KiwiSaver managers. And so I went up and teased the Prime Minister. I said, Prime Minister, you do know that the 10, there's only 2 of the 12 biggest investors in New Zealand in this room, right? Because with all this money coming with KiwiSaver, this $1 trillion, they could be easily the biggest investors. So you've got to get to know them and cozy up to them, right? So,
can I ask you a question about the conference? Were there any actual projects to invest in?
They put up 3, but only 3. And it was interesting that the feeling in the room was the government only have the capacity to actually process 2 of those at any one time. So we're hugely under-resourced in our ability to design and build and fund big infrastructure projects. So we've got to gear up there to do that. But that's been constrained because it just hasn't been this feeling that there's ever been enough money, because I've always talked about the government funding it or foreigners funding it, right? There's only been 2 sources of money. Now there's a third, and the third is we fund it with our own savings. Because all KiwiSaver is, in a way, Shamubeel, is just taking money away from people funding bigger mortgages, right? Because they just take out a bigger mortgage if they didn't have to save in KiwiSaver, and some of that money is now going into a massive pool of money which can now be invested in other things. We've had this incredible stop-start. Actually, you may know this number. How much money do you think has been spent on scoping studies for the second harbour bridge in Auckland?
Oh, I don't know. I mean, I've been involved personally in my previous life as a consultant. I've been involved in more than one of those things.
Yeah.
The issue with those things is we don't seem to kind of get to the decision point. We use this consultation as an excuse not to execute.
Yeah.
Very political. We like to commit to projects in the next 12 months, to next 24 months, but nothing afterwards because somebody else might get the credit. But these are nation-building things. This is, there has to be something beyond politics for a lot of these things.
So do you think it is just totally politics that stops this stuff from happening, or?
It is. We know that there is a problem. We know there is an infrastructure deficit. We know that we haven't built enough for near on 40 years. These are not new things. We know that we haven't maintained the assets that we have. So we can't do the basics right. So there's a bunch of things that I think we know enough about, but we're at the tipping point when the public want something different.
Yeah.
And I think, like you, I have some optimism that we're heading into a direction where things will be different.
So can I ask you some questions now?
Sure.
So, when you think about this infrastructure problem here and you think about KiwiSaver and so on, where do you think it could go wrong?
I think where it could go wrong is if we don't get the right assets into pension funds. Not every bit of infrastructure should be owned by pension owners.
So what would you not have in there?
I wouldn't do things that are highly risky. I wouldn't do things that don't have regulated, consistent returns. The kinds of projects that I want are toll roads. I want contracts for assets that are managed, that have long-term returns that are baked in. Because what we're trying to create for pension funds are things that government doesn't need to own, relatively low risk, but they don't need to be involved in.
Right.
Take that stuff off the government's books. Let the private owners deal with it. They'll do a fine job of it because it's not very risky and it's very predictable. But the things that are risky, the things that are big, things that are complex, that should still be in the domain of government, because government is best placed to be able to concentrate that risk and manage that risk. The way I think about KiwiSaver and pension funds more generally, KiwiSaver in particular, it's like public ownership without the government.
Okay.
So it's a really, really beautiful thing. It's not foreign capital. It's not government capital. It's something in between. So I think we just need to make sure that we're very specific about what we load up with it. We shouldn't ask too much of capital. It needs to be right size for the right type of capital. We've been talking about lots of different things. I want to kind of just touch back on, I guess, a little bit about just personal success from almost like from a young person's perspective. What were the kind of characteristics or traits that really helped you? And then a little bit around, I guess, just around leadership, because you've been in leadership positions for much of your life now. So.
Yeah. So, what does it take to succeed as a kid? Well, look, I only wish sort of two things for my children. If I could gift them two things, which I can't, I'd want them to have two things. So first is resilience. There is something really important about having to get up and having to do something even though you may not want to do it because it is expected of you, and then doing it. And I think that resilience is life and really important for a whole lot of times that you get knocked off or bad news or whatever. So I think resilience is one thing, and that resilience can only be learned. So I learned that resilience by just not having enough money. So I had 2 paper runs, and then I went stacking supermarket shelves at night, and I did any jobs I could in order to get money. And so that gives you good habits. The second thing I would love my both kids do have it, I'm lucky, is curiosity. And curiosity is they just want to learn stuff and find stuff out, and then in the process of doing that, then they'll latch onto something they really like, and then they can, with that resilience, they can go down and make the most of it.
Does this translate to leadership as well? It sounds like those qualities of resilience.
Yeah, it does.
Curiosity.
It does in the sense that, leadership is really about teamwork. So what we have at Simplicity is this amazing team of people who are all really good at what they do, and they're empowered to get on and do it, and they can sort it out amongst themselves. So very rarely do I get presented with problems, because they get sorted out by people who are incredibly capable.
So is your job then to set the direction and the culture? Like, what is it? Like, because then it sounds like you're not really needed then.
Yeah, exactly. Well, maybe I'm not. Well, I think leaders should aim for that. They should actually say that, when you've really succeeded, you're actually unnecessary and that the business is just running. And so that would be my goal, and I just sail off into the sunset and people wouldn't notice that I'd gone. That would be the most successful outcome of it. But I think that, there's a thing about leadership where if you get an incredible group of people together, not only are they running the business, but they're also coming up with the ideas, because, what the leader often is the ideas person, right? The first ideas. And the more successful the organisation, the less and less you needed for that as well. So the organisation takes on its own strategic direction. This whole thing evolves. Shamubeel, I'm no guru on that. I get up in the morning and I just do what feels right, and every now and again I stuff up and hit myself around the chops and say don't do that again. I wouldn't call myself exceptional at all in this leadership thing. I've worked for some exceptional leaders and I've been very lucky to learn from them. You're actually the most informed person in the room here about leadership, because you have been you've just seen a lot of businesses operate, right? You've been dealing with the senior management of those businesses in your role as a consultant economist. So if I was to ask you, what are the hallmarks of great businesses? Are there some common threads or some?
Great question. And I think there are absolutely some common threads. The things that I see are culture of businesses and their leaders. They're not unrelated things, but both are really important. So cultures of organizations, they're hard to kind of define, but you can feel it when you walk into a place. When you're talking about the collegiality of your team, that nurturing, that encouragement, doesn't mean that you're not called out if you do something wrong, but the culture of trust and accountability is really important. So I see culture as like the critical ingredient. Leaders are the people who are able to take people along with a long-term vision. And these leaders inevitably have 2 qualities that I have noticed, which is humility and curiosity. And the humility really comes through because there's a difference between, I guess, that arrogant, top-down management style of leadership versus that servant leadership, people who are there to make the most of the people around them. And those people are extraordinary leaders. They can get the best out of a large, diverse group of people. Sam, thank you so much for being on the podcast. It's been wonderful to have a conversation. The reason why I want to talk to Sam about, I guess, the economy from a slightly different lens is because so much of the economy is in the way that we experience it. Sometimes it's about not just about the education and the hard work, but also about luck and taking chances in life. Having good people around you, having good teammates, good leaders is really helpful. But also I was really encouraged to hear that capital can play a positive role. You've seen it in your working life over the course of not that many decades. But I think we are about to hit that sweet spot in New Zealand where some of those opportunities are in front of us if we choose to take them. Everything we cover in this session is for general information only. We are not tailoring our comments to your financial situation or providing financial advice or recommendations. This information and comments we provide are not intended to convey any guarantees as to the future performance of any investment products, asset classes, or capital markets. Past performance is no guarantee of future performance. Please refer to our full disclosure statement in the description.